What's up, coin traders? Going to be looking at Bitcoin right now. Obviously, the rest of the crypto space is pulling back pretty big. Some things are down double digits, but more or less, we are seeing most cryptos down between 5 and 10%. Bitcoin right now being down just under 4%, so 3.9. So going to go ahead and look at it right now, especially because we have been breaking daily structure right now. And although we have been talking about a pullback from some time now, we already had our big little pop here on a lot of the ETF news. And then obviously, like we talked about, little pop right off the news and then a pullback and retracement. Sell the news type events since we don't really have any hype coming in. And a lot of that was priced in. Now, if you're not currently following me here over on Twitter or X at coin_trades is the handle over here. We have been talking about this setup and a lot of the retracements coming for crypto for some time now. So would recommend dropping a follow over there to stay updated a little bit quicker than post over here on YouTube. So yeah, do want to talk about this daily structure setup first, because obviously now we have broken the daily structure. So bounce just below 50K, saw our rejection and actually pulled back, found support here on top of this 50 period EMA. But then the thing about that is that we did find rejection pretty much coming in right along both the 12 and 26 period EMAs. And if we do look to the left here, that was a big point of the heart line coming for this overall sideways consolidation pattern. So for example, if we pull up the VPVR volume profile visible range, you can see how much mass of volume was just sitting overhead just from all of this sideways price action trading before the recent ETF news announcement. So especially after shooting prices down below it, very likely and reasonable to assume, which is kind of why we couldn't actually get above that, especially with the exponential moving averages now in a bullish bearish cross formation. So you can barely see here the 12 is now rolling below the 26, and that does mean that likely these will start to trend to the downside, especially if prices do start to see it as that resistive point and see prices see the path of least resistance to the downside now. So if we actually look at the whole move coming from when we started this rally back in October, so about the middle of October, we actually had these exponential moving averages staying very bullish this whole time. So to now get a bearish cross on the 12 and 26 is starting to sign a change in that trend, especially since now we are starting to see a break in structure. So high found our low, lower high, and now pulling back, sitting a lower low compared to these points, pretty much right above about 41,550. Exact price for that though is 41444.97 is our low point, obviously now breaking below that 41,000. So we do have a pretty strong support line coming in right now at 47.32. If we do see a break and close below that, we will be targeting anyway the 38,300 level. Now, if we roll over to the 2-day chart, you can see that we're starting to break below these exponential moving averages as well. Still have the 50 down below to try to find support on, and even flipping down into the 4-day chart. Now, you can see how this $38,300 level will probably correlate to a support zone found in between the 26 and 50 period EMA. So do anticipate that to be a point where we will likely see a little bit of sideways movement trading. And then even if we do start to get a little bit more sell-off, a lot of us are still predicting a pullback to around the $32,000 to $33,000 level. Do want to talk about some technicals first. Right now, though, we're looking at the RSI on the current daily being 41.14, so not too far above the 30 line and still plenty of room to go to see a break in overbought conditions above the 70 line. But we know that right now, especially changing the trend, we'll probably not to see this bounce anytime soon. So likely that is why we are going to start eyeing some of these lower supports to actually see whether or not we can hold support against and find that directional change. If we look down here on the bottom, stochastic RSI has been mostly on the downside right here around the 20 line. So this does start to signal a lot of downside pressure coming in, but we know this oscillator is going to have some point where we do see it rally back up. Typically, I am expecting probably a nice supportive bounce around 38K. Where I could see then another run up to about the $41,000 to $42,000 range before another retest and potentially pulling back even lower. Those are bearish scenarios right now though, so in a bullish scenario, we actually would be looking at defending support here on 40,700 or down to 38,300, and then in that instance consolidating before the next run up and leg. That actually wouldn't be as much of an impossible scenario since that would be a retracement of about 20%. If we look at that scenario based off of Fibonacci retracements, that actually would be coming from the low in October. up to the current trend high right now would be looking at hitting the level right around 40,700 as that 38.2% retracement on Fibonacci, which would be a good point to shoot for if we do want to see continued upside gains. Pulling back to 38,000 is going to be right around the 50% retracement, so another good downside target. And then if we do zoom out here, we can see that the 78.6 is setting up pretty much right around the 31,388 level. So that could also be the next retracement downside and lowest scenario, especially from a technical level. That was such a big, strong zone for previous resistance, but finding our new trend high right now. So that's why this level, once again, is a very, very big target for Fibonacci's as well as previous retracements due to it being a technical level for previous resistance. Switching over into the weekly now, we can see very big resistance coming in at 44,000, and that has been holding so far. And to the downside, we're actually looking at plenty of supports, like we mentioned, 31,645 looking left, big point of support on the move prior to the current all-time high for Bitcoin. So that's another reason why we're looking at that level, both in terms of previous support as well as previous resistance now, and that Fibonacci retracement level. Will take plenty of time to actually return to that level, though. If in fact we do see it hit, we could actually see supports be found anywhere on top of that, though, specifically coming in the Fibonacci levels that we just talked about in the last segment. Do want to talk about this weekly volume here for the Bitcoin volume, though, because we actually had a weekly volume close just not too long ago at 193.133 thousand. So that was this current candle shot up to the current trend high and then found immediate rejection and then closed bearish. So huge upside wick showing a lot of selling pressure, and especially we know that looking at this weekly RSI, still extremely not extremely, but very overbought, needs to pull back. And that's why we are eyeing another future downside retracement, especially as we do follow the stochastic RSI as well. But we do have plenty of support targets to the downside to be shooting for. Over on Twitter and X, we have been talking about an upcoming sell-off and retracement for quite a while, so this is nothing new and or unexpected for most of us. I do think the ETF hype was about the most we will see, and it probably is going to overshadow the halving announcement. So a lot of the excitement for halving was probably priced in with the ETF announcement as well. So I do think probably there's not going to be enough hype just based off of the halving alone in order to sustain further upside move for the next couple of months until the halving. Because overall, I do still view it as very much a non-event, especially the more halvings we get through, the less and less impact on supply will actually have. Switching over here to the 4-hour chart really quick to talk about the short-term trends before we wrap up. Big rejection off these EMAs like we see, and now currently we're testing a very supportive zone that has been previous support. So plenty of support here, and the reason we say that is because we actually have a very strong closing level of support coming in on top at 47.39. Below that is going to be price level support at 45.26 and 41.63. If we do see prices now break below 41.63, then that's pretty much going to signal the next downside leg coming in, which is where we will experience and expect prices to get down to about 38.491 down to 38.246. So from current prices, if we actually don't hold this support level, we could still be looking at about 6% pullback from here down to the $38,000 level. So no immediate need to come in and buy the dip right now, since there are still plenty of downside targets and we have been overextended on the longer term charts. So it will take time to actually pull back and see a retracement from here. So no immediate need right now. Just be patient and wait for a lot of these setups. Overall, though, it will still be a very good opportunity to buy that dip. And especially given the amount of upside we've seen on a lot of the crypto space, not a huge threat to downside and finding new lower lows and breaking the structure on the longer term charts just yet. But yeah, so with that actually will go ahead and close out the show and wrap it up for now. Hope you all enjoyed. If you did, make sure to hit the thumbs up, like, and subscribe button. If you have not done so just yet, post all questions, comments, issues, disagreements down below, or shoot them out to me over on Twitter or X at @coin_trades. That is going to wrap it up for now, though, so do appreciate all the continued love and support. It means so much. Stay safe, take care, everyone, and I'll catch you back in the next video.